How's it going, guys? It's CryptoBud here. This is going to be lesson 3 Elliott Wave analysis. This is going to be our first part series in the technical analysis section for my channel. And I'm going to tell you right now that I'm going to be teaching for anyone who's interested a complete course on technical analysis and chart patterns. I know I've been getting a lot of questions about people asking me, what do you look for in a graph? How does Elliott Wave analysis work? All these very important questions that I think I don't really cover in the regular videos because either A, we just don't have the time, and two is that I want to keep the videos compressed. So what's going to happen is that I'm going to do these little mini kind of lessons. And so if you're interested and you just want to kind of get the gist of it, you can come to this. If you want something a little bit more complete, probably in the next couple of days, I'm going to post up a Udemy account and you guys can sign on and take a look at that course. That one's going to be a lot more detailed. It's going to have some supplemental information that I think may be useful to you and for you just to kind of navigate through the thought process of technical analysis specifically. Okay, so the first thing is I'm pretty excited. I'm a very, I'd say, strong proponent of technical analysis just because I think that technical analysis gives you a more objective view on investments versus something where it's a little bit more subjective and changes a lot. So let me give you a good example. Looking for entry points and looking for exit points is a good common problem that I have. So you could have a really great idea, like a great investment, like you think that Bitcoin is valuable, but if you pick the wrong point, what's going to happen is that, or the entry point, what's going to happen is that you're going to start losing money left and right. The other one is the exit points. If you exit too early or you exit too late, you can also leave money on the table. So technical analysis kind of balances that out. So the next couple of series of lessons that I'm going to be teaching people, teaching you specifically, is going to be about how to navigate through price patterns and how to go about doing that. And if you look at my other videos, you'll see that I employ that a lot in a lot of my stuff because I feel that as a trader and also as an investor, technical analysis provides me with an extra dimension of how to make different investments. And again, it's not a perfect science. It's actually not considered a science, but for me, it actually works. So hopefully for you, it's something that you can benefit from. And like I said before, if you want to know a lot more in detail, I can give you, I'm kind of developing that course as we speak so that I can help anybody who wants to know about that. Okay, so the first one is going to be Elliott Wave analysis. Basically, I use this for my last couple of them, and I'm going to talk a little bit about how it works and how these patterns tend to repeat itself. So the topic is going to be learn how to read charts and apply price patterns. Okay, so the question was, what is Elliott Wave, or Elliott Wave analysis for that matter? And Elliott Wave analysis really started in the 20s. Basically, it was a man named Ralph Nelson Elliott. And if you remember from the 20s, just a little walk back history, that was during when we had the big roaring 20s boom. And so basically they were kind of like the same thing as what was happening right now, as people were speculating on stocks at that time. And that kind of led to the Great Depression a little bit later than that. And so long story short is that he was looking at these price patterns, and at that time they didn't have the internet. They basically looked at newspapers, and he was looking at these charts, and he was like, wow, some of these stocks actually work the same way. Like they actually have this pattern. And he basically, saw that they reacted in these waves. And so when I saw it, I was like, you know what? I'm seeing the exact same thing that Elliott saw. And then anyway, so that kind of, once the stock market crashed in the 20s, and during the 70s, it kind of came back up again because again, we start seeing another bull market and then it started repeating over again. From my personal experience, I've seen the Elliott waves left and right, especially during the dot-com. So with that said, I picked Elliott Wave because I felt that Elliott Wave, you can actually see this reoccurring over and over again. Anyway, so to many people, the stock market prices occur randomly. It looks like almost like random prices on a chart. And if you look at the academics, they'll always say that there's no such thing as a pattern on prices because the market will always reach to equilibrium, meaning that if you have a stock price, there's no way you can beat everybody, right? So that's the argument. My argument is this: I'm saying that that's possible, but in my experience, that doesn't really work. The market's actually fairly inefficient in that manner. Inefficient meaning that the market doesn't take into account investor psychology. It doesn't take into account irrational behavior. It doesn't take into account greed, fear, all of these things that make Elliott Wave actually possible. So the other one is Elliott described what we'll call these market cycles regarding to investors' reaction to basically outside influences. So outside influences could be like news, it could be relating to developments in the company, and also the psychology we'll call of the masses. So once you actually have everybody aggregated together, we all kind of work like in a herd. And so Elliott Wave was basically trying to represent that with price patterns. And he found that basically there were these upward swings and these downward swings, or we'll call these psychological swings. Later on, Keynes, which was basically an economist, a famous British economist, he basically said that there was these thing called animal spirits. And animal spirits basically means that the market always has this kind of X factor. And in Elliott Wave, he was really describing it as more of like mass psychology. So what's the crowd really thinking when they get into these patterns? And so what he found out that there was these patterns that kind of form over and over again. He called these waves because they kind of occur in a very, very predictable manner. Okay. All right, so the source follows information from Wikipedia. I basically just kind of took some of that, just put it on here. So I didn't want to type everything up, but just to kind of give you, if you want to visit that site, it's got a little bit more in detail, but I'm just kind of giving you guys more of my flavor on it, and hopefully you kind of get something out of it. Okay, so the next part is going to be an Elliott Wave pattern. So the pattern basically works this way. If you look at the Elliott Wave, there's going to be basically what I call a 1, 2, 3, 4, 5 move. Okay, so the waves go in these kind of upward directions. They drop and then they go up and then they drop and then they up. The key thing here is that it's called a cycle. And what happens with the cycle is that at the end of the cycle, the wave begins to correct itself. And so that's when the trend is no longer true. So let's take a look at this example right here. If I'm looking at wave one actually goes up, it corrects a little bit. That's actually an okay correction. As long as wave 2 does not go back down, the Elliott wave is still intact. And so what happens is that when people look at these patterns and you want to predict what's going to happen in the future, you have to figure out what wave you're in. If you are on wave 1, you do know that if you hold it for a long time, you're going to be making a lot more money in the future. However, if you think that you are in wave 5, then you better make sure that you start getting out the positions as the price rises, because we know after wave 5 the whole thing is going to collapse. So basically what I'm trying to say here is that Elliott was really into identifying these 5 important waves on the upside. Okay. Now on the downside, you have basically a situation where we have an ABC wave, and they kind of go down this way. And so if you're shorting or you want to take advantage of the down move, you want to identify the A, B, and C waves. That way you know exactly where to go. Now, one thing I want to mention, guys, is when people say buy the dips, what they're referring to is really on an Elliott wave, point 2 and point 4, and possibly point A. So if you are thinking of entering positions, you always want to make sure you're looking at the specific wave and also looking at specifically which points you're in the entire Elliott wave curve. Okay, now this is actually called the main trend line. So what happens is that a stock or equity or any sort of cryptocurrency will go up in this kind of nice parabolic move. And what's going to happen after that is that you can start adding positions here and here. And the other thing I want to mention is that wave 3 is always going to be the longest wave. That's the one that actually has the highest return and bang for your buck. It's the one that actually gets everybody in and excited and kind of ready to go. Wave 5 kind of gives your last hurrah. It's like, oh, we're going to make it all the way to the top, and then all of a sudden, bam, it's over. Okay, so some people enter in at different positions, and so they don't really know where they're at. And because you can understand Elliott wave, you can almost kind of predict what the price is going to be. All right, the last one is that they want to mention about these patterns, and we'll talk about what this little pattern here is very common. We'll call the head and shoulders formation, where prices eventually start changing and then it starts going down in that one. Now, in terms of time span, this wave can actually occur years, it could be months, or it could be days. So it does not always have to be a set period of time. For example, if you take a look at Bitcoin and you look at what's happening right now, I mean, we are basically what, 4 or 5 months in, maybe 6 months, 4 to 6 months. This Elliott wave could have already been finished in 6 months. However, had it been another time, it could have been 3 years. So keep that in mind, that the time span really depends on the actual investment that you're doing, the asset class, and also represents the psychology of the market. And that's something that Elliott really kind of stressed at that time, that these moves can occur at different points in time. So that's a very important point. So make sure you remember that. Okay, take a look at chart patterns real quick. These are common ones that you'll find. The one on my left here is going to be one we're on an uptrend line. And what you're seeing is that the price drops, it rises, drops, and rises, drops, and rises. And when you're doing technical analysis, you always want to look at channels. And this is actually what we call a channel right here, because basically what's happening is that as long as it stays within that channel, you are on what we'll call an uptrend. And pretty much you want to hold all the way from 0.1 and running all the way to 0.5. And once 0.5 breaks, then that channel is broken. And at that point, you want to start exiting your positions, because now we're going to start going down and we're no longer going to be going up in the former uptrend line. The other one is going to be on a downtrend line. So what happens when we have these things called reversals? So reversal basically means that if a crypto is going down, at some point it's going to have to reverse, right? Nothing goes down forever and nothing goes up forever. So what happens is that same idea, but now we're going to invert that out, where we're looking at point C. And point C is going to be the bottom end of that channel, so that you can start accumulating positions. So when people ask me, oh, how do you know when to enter a position? How do you know where you do that? Well, you always want to look at these, what we'll call support resistance areas, or channel points, where if the uptrend is still up, then you obviously want to keep on adding more on the dips. However, if we're on a downtrend, you want to start unloading on the tops. And usually some people are really hesitant and they just say, you know what, I'm just going to buy and hold and I don't care about the patterns. And sure, you can do that. But the problem is that you're going to be leaving money on the table, or you'll be losing money as you're holding. And so what you don't want to do is be caught in a position where you're selling these tops here while the entire channel is going up, and you're missing out on all that entire run. Or on the flip side, if you're on this side and you're buying the dips, because remember, people say buy the dips, right? But at the end of the day, you're going lower. Okay, so again, just kind of keep that in mind with the Elliott wave. And again, we can have Elliott wave 1, 2, and 3. They could be slanted, they could be steep, or they could be kind of flat. So it really depends on the pattern that we're looking at. Okay, so here's an example of Elliott wave applications. And so I was talking about this in my other Ethereum trade, a little bit about how Elliott wave I was looking at those Elliott waves. So just to kind of give you my thought process on how this works. When I'm drawing Elliott waves, I always want to look at the top end points and the bottom end points. You notice what was the high point of that candle and what was the low point of that candle. So for example, right here, Ethereum, ETH, by the way, on the USD chart, and I'm looking at USD because it's just a little cleaner graph, but technically I'm supposed to use the Bitcoin graph. If you take a look at on the 18th of May, okay, I did that one as Elliott wave 1. Now you might say, why did you pick that, and why was Elliott wave 1 there? And the reason why was because that was the time when we started that new uptrend line. Okay, so 18 actually moved up to the 25th. That was a 7-day run, and I picked Elliott wave 1, and I noticed carefully how I drew that point where 1 is. I kind of clipped off some of the high points, but the candles are pretty much kind of intact there. Then we had that drop on the 25th, and that was actually the correction on the uptrend line. So if you looked at this, you're like, could that be Elliott wave 1? Sure. So what I'm going to do is start adding positions on number 2. However, if you saw Elliott wave 1 already way before, then you're automatically buying in up to the uptrend line. So there's different points. Some people say, I want to only buy on the dips, and that's perfectly fine. There's nothing wrong with buying on the dips. However, you can still maximize your return if you're buying on the uptrend. Okay, now then what happened was around May the 27th, I want to say, Then we have this basically this candle that kind of rose to the top. And I forget what the name is. I have to research that again. But that's actually, I think, a hammer. And in candlestick formation, when you get a hammer, basically what happens is that the price is going to shoot up. It predicts that the price is going to shoot up the next day. And I'll talk about candlesticks later on, because candlesticks are actually my favorite because they tell me a lot about the strength of the actual prices. So basically what that said was that the buyers were finishing off at the top. So whenever that little bar that you see, that red bar is all the way at the top, that means that the buyers won. So they were kind of debating on where to go at that point, and so they kind of shot up like that. And then, I mean, not the bar, the red rectangle there. And then after point 2, then we had that massive run all the way up to June, I believe. I want to say June the 12th. And June the 12th was a huge run because if you take a look at it, that was definitely Elliott Wave 3. Now remember, and I think someone pointed this out for me, that Elliott Wave 4 cannot cross into Elliott Wave 1. So basically, there was on point 4, if you see right there, that's when we had that massive drop, and then all of a sudden we spiked up. And again, we're seeing another hammer right here. Okay, so what I'm seeing right now for ETH is we're in the midst of starting Elliott Wave 5. Okay, so if I'm the one looking at this, I want to make sure that I take advantage of these dips because I know that we're still on the uptrend. Okay, so anyway, so long story short, if you take a look at this graph, you want to be able to identify where Elliott 4, Elliott 3 is at. So when you're putting your positions in, you're looking at where the entry points are. And so that's what makes this so powerful, is because the Elliott wave almost gives you like a snapshot into the future. And so when you have that in your hands, you're basically ready to go. I mean, you just basically start loading up on point 4 and point 2. And if you want, you can just start loading up on the uptrend because you know that what's coming on the upside. Now, I'm going to tell you right off the bat, the Elliott wave is not 100%. It's not 100% guaranteed, but it does give you another tool in your bag to be able to look at entry and exit points. I've used it. Reliability, sometimes it's like a 60% reliable. I know you might say, wait a minute, why would I say 60%? As long as you're not losing money and you got a couple of hitters that are going good and you're using Elliott Wave and it works 60% of the time, you're still making money, hey, it's a winner. Sometimes I hit 100%, but again, it kind of varies depending on the analysis. So anyway, so that's Ethereum. So if you're looking at Ethereum right now, okay, we are actually starting up Elliott Wave 5. So we got one more kind of run, and how long that's going to take, I don't know. But at some point, what's going to happen is we're going to get that drop and that correction. So when people talk about drops and all that, it's kind of a little bit interesting to see that. So notice carefully the May, it was in May, and then now we're into June. So this Elliott Wave cycle is literally running at about a month in. So, you know, we're looking at about 3-4 months out. That's basically what we're doing with the Elliott Wave. Okay. Okay, now here's Bitcoin, and I'm going to ask you guys, where do you think Elliott Wave 1, 2, and 3 are at? So take a look at it real quick, just kind of think about it, and let me see if I can kind of get some people in here to comment on that. Just kind of test yourselves to see where you think Elliott Wave 1, 2, and 3. Okay, and that's it. Okay, so let's go ahead and do it. All right, so if I take a look at Bitcoin real quick, Bitcoin has had such a huge run. I mean, it's beautiful. This graph is gorgeous. It's phenomenally. It is a 10. It is a 10 on my graph. I look at this and I jump up and down like as if I won the lotto, because it's perfect. Okay, so here we go. Elliott Wave, depending on your, and you see, this is where it gets really subjective because some people could have different interpretations on the technicals. And if I take a look at Elliott Wave 1, you can make a case for Elliott Wave 1 right here. However, the correction here is actually fairly small. So with me, it's kind of a little tricky because I don't want to say that's Elliott Wave 1, but let's just say it is. 1, 2, 3, 4, 5, and all that. So if you pick right here, you're saying the Elliott Wave 5 is right here, and so that doesn't work. So that can't be it. So now we'd kind of do a little bit of guessing here. We can say that this could be Elliott Wave 1 starting, let's say here, 1, 2, 3, 4, and 5, and then now we're in this corrective mode. Hey, that sounds pretty good, right? Because if you think about it for a second, Bitcoin's having all these problems, and maybe, just maybe, we are starting to correct this because that could give that fuel. So here's the thing, you have to marry fundamental analysis with technical. You can't just always look at price, because you have to ask yourself, the question is, what would merit Bitcoin's drop? And if it's going to be the whole thing on SegWit and the issue with trying to get Bitcoin scalability issues and transparencies, then hey, that could actually cause that drop. So my personal opinion right now for Bitcoin, and again, you could disagree, and that's perfectly fine, because technical analysis is not a hard science, is that I would say this would be Elliott Wave 1, okay, going up the trend line, 1, a drop 2, 3, and this one for sure has to be a corrective 4, 5, and then now we're in this counter rally. So at this point, Bitcoin is predicted to drop at this point. So if you are into Bitcoin, you probably want to start selling at the tops and maybe looking at where this one's going to find support. Now again, I could be wrong. Bitcoin can shoot back to 3,000 and we can go back again. And so at that point, you have to reset the Elliott wave curve again and reset your 1, 2s, 3s, and 4s. I could perfectly say that maybe this is Elliott wave 1. 1, 2, 3, 4, and there could be another one. Elliott wave theory, and if you take a look at this one right here, this is a little bit more kind of subjective. This guy right here, this I don't consider it a correction because we'd never really dropped too low. There is no percentage. I mean, we'll have to look at what we'll call Fibonacci numbers, which I'll do in another video. So you have to combine Fibonacci with Elliott to kind of see if it actually merits a correction or not. So I'm not going to go into Fibonacci because that's another lesson on that. But if I were to make two strong cases, I would make one strong case for Elliott Wave 1 here, 1, or I can make Elliott Wave 1 case here. And the reason why I would choose probably maybe one, or probably the second one right now, just because this one technically I would not consider a correction. I would kind of consider it more of like you know, a start of something, because you're not really getting that price move, although I can't ignore this trend right here. Okay, so I'm optimistic about Bitcoin. However, I do understand that we are having some summer problems. So if you were to say right now, choose which one would it be, I'd probably say this would be Elliott Wave 1, and then we're in the correction right now. Okay, this is personally me, but I don't know, you guys may disagree with me. Okay, so with that said, that basically covers Elliott Wave 1. I know I've talked a little bit more in detail. I'm just going to show you one last thing that I use, and you guys can kind of play around with it. Okay, this is my actual screen here for what I use. Is actually tradingview.com. Some people were asking me how do I do that. So basically what you do is you click on here, and then you can actually do an Elliott wave. I believe it's right here somewhere. Okay, right here. If you click on this one on the left and you look at the ABC 1, 2, 3, you can take a look at these. You can just start kind of setting that up, right? So if I want to do the A, I go 1, 2, 3, 4, and 5. Okay, something along those lines. Okay, so just to kind of show you guys that you can basically have that going on. The other thing I like to show is that Elliott Wave 1 can be used with different indicators like Fibonacci or like moving averages. So the idea here is that if this is the end of Wave 5, we're basically in a corrective mode. And what I want to do next is I'm going to have to change this to the ABC corrective mode, go down to A and up to B, right? And then this could be somewhere up here, and then begin shorting it because it's going to start dropping, or begin to sell my positions if I have Bitcoin. Okay. All right, guys, hopefully you enjoyed this video. That was basically my analysis for the Elliott wave. Again, if you found this to be interesting or whatnot, just stay tuned for the Udemy courses that I'm developing right now. I'm just kind of working really hard to kind of get some good content out there. And this video was more about, you know, kind of like a little preview. I'm going to be doing a little bit more so that everybody can have access to them and just kind of get a taste of kind of what I'm doing. But I really like technical analysis just because it's just a great way of looking at it's just a great way of looking at charts. I mean, it's great. I mean, especially when you're not hyping it up, or you're not trying to pump anything. I mean, you look at it, you're like, does this look like it's going to drop? Does this look like it's going to rise? And I'm looking at this right now and I'm just like, Bitcoin looks great. I mean, it's a great chart, but it's got some problems right now. And if I'm holding Bitcoin, I don't want to be sitting on a loss for like 2 months. And I know I'm going to hold it because I believe in it in the long run. But what I don't want to do is have that opportunity cost. And what I mean by that is that I could be taking Bitcoin money that I unloaded and buy some Ethereum or buy some Litecoin. And I don't want to be sitting and looking at my portfolio day to day as it's dropping like 20-30%, because that's not the point. Okay, you take the money and you run. All right, so anyway, this is Crypto Bud out here. Again, like, subscribe, share this with someone who maybe needs technical analysis and maybe that they want to learn. I think Elliott Wave is one of my top indicators. Some people think that technical analysis is just a bunch of garbage. I you know, it works for me. It's worked out for me in the past. I'm making money off of it. And if you guys take a look at my videos, it's fine. If you say technical analysis is a bunch of garbage, bunch of, you know, how can you look at charts all day long? I mean, everybody has their system, but I believe in it. I think that it's got some value in it. And I do hope that you employ it as you're doing your own investing and your own strategies, because it does protect you. It does protect you against these corrections that we have, and it does allows you to see things from a different angle that maybe you don't see when you're so married to these coins, right? I know some people are like, I'm married to like Ethereum and I'm not going to let that go because Ethereum is going to be the future and all that. I'm like, sure. I mean, I'm fine with that, but I understand that Ethereum can also have these patterns. None of these coins are exempted from the law of supply and demand. And at the end of the day, it's really that. It's how much supply you have and how much demand you have, and at what price are people willing to pay for it. And at some point they get lopsided. You get more supply or you get more demand, and or you get both equally. And these charts kind of allow you to see that supply demand dynamic that maybe your fundamental analysis doesn't see. And I do fundamental analysis as well, because I don't want to see only through one angle. I want to look at it from 3 different angles, 4 different angles, and kind of compile that information and begin to make my assessment as to what exactly is the best course for movement. Okay. All right, guys. Well, Crypto Bud out here. Have a great weekend. Spend time with your family. Spend time with people that you love. You know, don't look at the charts all day. Life is too short. And enjoy the fruits of your labor. But remember, easy money is always it's not, there's nothing that's easy. Okay, you always have to do your homework. You got to do your work. You got to do your research, and once you do that, then you'll see that come out. Okay, all right, signing off.